Wonderful morning to everybody. With a positive vibe, we have started the session for Indian markets yesterday. As predicted, the market did it, and with the support of Friday's one and Mondays particularly, the market is now witnessing a bouncing back kind of activities. As expected, the yesterday's was above the level of 23,500. It has closed. Since it has closed above the predicted zone, we can expect the continuation on the bouncing activities till it reaches 24,000 level as a bigger and psychological resistance spot. Those who have built the long position might have enjoyed by booking huge profits. Even if you are holding, that would be more than that point. It would be a great chance to have a higher gains. Anyhow, for the day, the 18th of March 2026, the market should not close below, or otherwise should not come back to below the level of 23,500 starting from 15 minutes time frame. In any larger time frame, they should not have that close. This is the first signal one can get. If it closes, what may happen? If you are questioning me, means nothing will big happen for the market. The growing tendency may get impacted and capped, and because of that, the 23,800 may act as a stiff resistance until it is getting broken on the higher side. So the 23,500 should be watched closely, and in any time frame starting with the 15 minutes candle, it should not close below to that point. If it closes, we can expect the retracement towards 23,400 and even 23,300. That may not be necessarily happening today itself. It may take a chance for consolidating before reaching this range. Anyhow, the signal will be get once it closes below 23,500. In case if it is sustaining above, yes, of course, that is the current trend, the behavior based the Nifty is having. It should sustain, it should keep moving up. If it is so, 23,800 would be on the target side, one can fix. With the supports held by Nifty yesterday, and of course, an immediate resistance point also got conquered by it. In both sides, it has a win-win as a concept-based movements or actions. So that the Nifty might be eyeing for another resistance point of 23,800 as a maximum. That may be happening today itself. If it is not, tomorrow probably happening, provided it holds the 23,500 as explained now. We can see a stable opening for our markets in line with the flat to positive tendencies from international markets. After opening, we would be turning our eyes and all towards checking the range, whether it is maintaining the set range or not. Like for that, the range would be fixed like 23,500 and 23,800. On the lower side, it should not go below as explained. On the higher side, it may be get resisted. That means around 23,800. Between this, a meaningful range, we can expect a consolidation and volatility, range bound volatility. Also, with a buy on dip strategy, the probability will be very high for attracting the buying, even it is coming near to the 23,600 or even coming to the level of the support point of 23,500, where in between these levels, supports or buying demand will be arising. One can follow the buy on dip strategy to make use of this kind of behavior to get a nominal to higher level of returns even for the day. In case it breaks on the other side of level, if it is so, 23,400 may be expected on the lower side, or by the way of breaking the 23,800, we can see the 24,000 as the next attempt it can do for the higher side. From the positional point of view, you should actually maintain this point since we are keep insisting and mentioning in a regular report until it is happening. There is no change. It should at least close above the March 10th low point of 24,079. That should happen to have a confirmation on the reversal or turnaround on the Nifty side from the corrective phase it has experienced in recent sessions. Recent 2 weeks, we can say. For getting that confirmation, it should definitely decisively close about 24,079. If it happens, we can see the Nifty eyeing 24,700 as its next bigger resistance point or target point to reach out. If it is struggling to close about 24,079 means we can somewhat get the signal about the hesitancy in the upside close for the positional activities and all may lead the Nifty to get corrected with the way of retracement towards the earlier supports of 23,800, 700, 23,500 like. So it should be noted, very importantly, it should actually hold the 24,079 after closing above the point for 2 days. At least 1 day you may get the partial signal. For 2 days, the total signal and confirmation will be there for Nifty 2-inch further higher. From the sectors front, major sectors are expected to be leading the markets to the expected zones. But anyhow, the primary impact from these sectors like automobile, real estate, bank, metal, defense, capital goods, even IT, some of the IT stocks also can be expected to push the Nifty northward. Anyhow, the short covering based and value buying, these are all now cooking and pushing the indexes, sectoral indexes towards the higher points. Because of this short covering rally, it may be get resisted sooner than we expected. That means in advance to the resistance point the indexes are having, which means you can have the Monday's high and 10th March high. These and all would be working as a resistance point for this sector oriented analysis. While approaching near to that point, it would be better to book your profit on the stocks and wait for the dip to be happening as a retracement. Then you can participate again. Anyhow, the buy and dip will be working out for today even. On the stocks front, based on news and technical behavior, the stocks like Wipro, Tech Mahindra, Hexaware Technology, both that means the 3 stocks under the IT sector now. Tata Steel, National Aluminium from the metal space, Aurobindo Pharma, India Glycos. These are the stocks the day traders can focus on to get an improved prospects from trading activities. Keeping stop loss, of course, will be must since the volatility not settled till now. Even though there is no volatility, it would be prudent to maintain a stop loss on all transactions to get better risk and reward. So that's it from today's pre-market discussion. We can see some queries fallen. IOC, is the query now. See, IOC, which is having both kind of businesses, offshoring and onshoring of oils. So this IOC as a stock is now trading weak because of the major impact from the crude oil price rise. And if you are holding, it would be better to make an accumulation kind of activities or average based things for the IOC when it reaches 143 or below levels, because it is having a support near to the 139 only. Before that, no strong support is seen on the chart. So it is better to maintain an accumulation strategy. If you are a investor, that you can hold at least for next 1 to 2 months. If not, if you are a short-term trader, it would not be prudent to accumulate here or participate here. If you are holding, you may use any bounce to reduce the positions or shares, and then you can wait for the next 2 days. That means till this weekend, what it is going to tell for the trend. Anyhow, overall outlook for the IOC is weak only. And next, natural gas put option query is here. For natural gas, yeah. See, because of the war kind of activities, the natural gas, because of this production lacking and supply pressure, it is now trading weak only. If you are holding put, you can maintain holding it. You can even accumulate further if it cuts the level of 200 and yes. If it cuts the level of 270, you may further add positions on the put option side. Otherwise, you just keep holding the existing one for the target of 270. Then you can cover around the zone. If you are having multiple lots, it would be better to cover a portion around 270. Once it breaks the 270, there onwards it may be seeing 260 as the next. That means exactly to be say 259 only. The next support is falling. The structure clearly weak for the natural gas. You can keep holding the natural gas put option. For ITC, the query fallen now. See, for ITC, it is better to, if you are a investor holding ITC shares, it is better to shift your some portion of ITC shares capital towards ITC holders or otherwise any other stocks, because we are seeing the degrowth activities on the company's business side as well as on the stock price. It may not be a good one for you to lock your capital with a lack of growth oriented momentum which this stock is now having. So it may be getting higher time to get approaching or get achieving the next target of 330. For that 330 even, it would be expected to take another 1 month. So this is what the issue for the ITC's performance. It will take more time to give a small return. So it would be better to shift your shares somewhat from ITC to ITC holders. So CAMS is the query. For CAMS, it would be better to stay away if you are a long trader or if you are already having long positions. Keep the stop loss as 625. If it cuts and closes below, even in the one hour like time frame, the chances for drifting towards 600 may be happening. So it is better to maintain 625 as stop loss. If it holds the stop loss, the chance for rising towards 650 to 660 would be happening. There you can reduce your position. Total structure of CAMS still remains weak only. So that's it from the query part. We can now conclude today's session and meet it again in the tomorrow's pre-market outlook discussion. Wishing everyone to have a fruitful day. Bye-bye.